Good morning, traders. This special update is to keep you abreast of the metals markets, gold and silver and platinum. I've seen a lot of research on Twitter recently highlighting what's going on in gold and silver and referencing it to the 2018-19 rally, the 2015 rally, and even the 2008-9 rally. What I want to point out is that I believe we need to look specifically at how currencies are reacting, and this early phase in gold and silver right now is more like the 1999 to 2003 rally phase in gold and silver, and that's the point of this. I'm going to show you how I believe this comes into play. Now, I've highlighted on this chart here, this is my custom cycle gold cycle index, highlighting the fact that we have a very strong bottoming pattern setting up right over here. But I'm going to highlight some other things here. This particular chart goes back to 2018-19, and you can see that we had a rally phase here in gold, which is this gold line here, okay, while currencies were appreciating. Okay, so you can see here currencies, sorry, this is inverted. This is currencies devaluing as gold continued to rally, and this is currencies appreciating or gaining strength as gold consolidated. So what we have is an inverse reaction. Dollar goes up, gold goes down. Dollar goes down, gold goes up. And this is a scenario here where we're seeing dollars going down in this case, currencies going down, and gold has gone down in this time frame. But so this is the standard. Dollar goes up, you have weakness in gold. Dollar goes down, you have strength in gold. And this is really the same type of activity we're seeing here because this currency chart is inverted. This is the dollar going down, we have strength in gold. This is the dollar going up, we have weakness in gold. Dollar going up, we have weakness in gold. Dollar coming down or consolidating. These are actually currencies, global currencies. This is the global currency index. Weakening, we have some strength in gold, even though we didn't see it here. But now let's take a look at something very, very interesting. So what we're going to do is come over to this chart. This is a long-term chart going all the way back to, and I'm going to shrink it a little bit more if I can. Okay, I can't, so I'll go to monthly. This is a long-term chart from 76, and what I want to highlight here is, so we're looking at the Japanese yen in this yellow color, the euro dollar in this orange color, and the British pound in this blue color. And what I want to highlight is that even though we had this rally in the 70s in gold, this is gold up here, when you take a look at currencies, we have currencies strengthening, foreign currencies against the US dollar, and then we had this massive decline in foreign currency from roughly 1995 through this 2000, let's call it 3 or 4 time frame. We had this major decline, particularly in the euro. Okay, and where are we at right now? From this peaking formation back here in 2012, we've seen just a continued decline in the currencies. So when people are referencing 2018-19, yes, they're referencing this peak here and this peak here off of this bottom in 2015. But the scenario here is that I believe we're really closer to, if I can draw it, we're really closer to, I would say, this time frame right here, in the sense that we are seeing this deep, deep bottom, actually maybe closer to, and I'll have to redraw it, maybe actually closer to this type of a phase right here, in gold, where we're seeing currencies really weaken to the extent that, let me go back to this time frame, currencies weaken excessively down into a basing pattern. And I think this is what we need to be aware of. If I am correct, we've already seen this bottom, this consolidation, and in reality, we've seen this move up. So I'm going to move this to here, because this is very close to where we're at. We've seen this type of basing formation, but we have yet to see global currencies start to move higher. We're really in this phase here, this deep bottoming phase right here, where gold and silver are setting up a massive, deep base bottom, which extended, when you take a look at how this move continued till 2011, you can see here that we had a massive rally from this basing formation, and you can see here, we had this move up, we consolidated across, and then we started this recovery while currencies were basing and bottoming and weakening. Then we had the rally here in foreign currencies, which presented the US dollar was weakening through this time frame. Then we had this shift where currencies weakened through this time frame as the strength of the dollar came into play, and this was the parabolic trend. This was this massive uptrend here that presented this massive parabolic trend to the upside. So when we take a look here, we've got this strengthening in currencies from roughly, let's call it right here, up to here. Okay, so that's from 2002 to 2008, which is where we had the weakening US dollar, okay, or strengthening US dollar, causing these foreign currencies to weaken. And this was weakening US dollar that prompted a massive rally from this phase, try to draw a line here, up 264% in gold. Okay, now if my theory is correct that we're in this phase, weakening CNY, sorry, British pound, weakening euro, weakening Japanese yen, and we come over here and take a look at where we're at, weakening British pound, weakening euro, weakening yen, and you look at this formation, we've had this rally. So I argue that we're in this stage was our initial rally, just like that pop. Then we end up in a consolidation phase here and here. And this time being different, I'll try to change these and turn off the end of the arrow phase. This consolidation phase and this rally phase here, if I were to draw this as a consolidation phase and a consolidation phase here, I argue that because we're seeing strong US dollar, weakening global currencies, and seeing gold hold up and double bottom here, my argument is that we are really at this phase right here. We've seen this move up. I'm going to try to draw this here and here. This is the 2015 rally, and then we get that consolidation phase and that base. Now we've come back up to this area, and we're trying to consolidate here. And essentially where we're at, I would argue really is more, because we haven't seen these currencies turn, we're really right there. Okay, we are at this point where we are at a critical juncture of the strengthening US dollar. We're consolidating. We don't have any turn yet. We're building strength, building a base right in this area, and then we're going to start to see a move to the upside, which will likely be from the current lows. If we said this next move, likely be a 20 to 35% upside move. And if I am correct in that assumption, then the next move in metals over here, let me change that color to purple. The next move in metals, when we look over here, being a 20 to 35% move in metals from this low, puts us at 2100 roughly up to 2350. But what's more important is that you understand this is a very early basing pattern. So where we're at is this move here, vertical line, this move here coincides with this initial move here, right there. Then we get the basing pattern, then we consolidate near the strong US dollar move here in early 2000, 2001, 2002. You can see that the dollar was still strengthening. The European, the British pound and the euro started to recover first, and then the Japanese yen started to recover very lately in 2003. So we've seen this move, and we're kind of right down here, although we're seeing a deeper decline in these foreign currencies. So now if we take a look at where we're at here, we've seen this deep, deep decline. We've got this move here. This is a stronger US dollar. My expectations is that global currencies are gonna wash out some sort of a low. The dollar continue to strengthen for maybe the next 4 to 6 months, but metals, I believe metals will start to move in kind of a upward congruent manner up into this area, just like we saw back over here. And remember, when we see this and we spread it out, what happened here is metals weakened, currencies, the US dollar was strong, the foreign currencies weakened, and then they didn't gain strength until really back over here, where they all started to move higher back in 2003. And look at what happened from this base. When you take a look at this base, which is where I believe we're at right now, by the time metals or currencies really started to strengthen, we had a 35% rally. And metals or currencies really didn't start to strengthen from this point, March 2002 till September 2003, roughly 16, 17 months later. So if we come back over here and we look at where we're at, we try to figure out 16 to 17 months from where we're at here, or let's call it August. So that'll put us at the end of 2023, right in this area. So we're looking at a real strength move in metals right in this area. And that means that we have literally another 14 to 16 months of upward activity up into this area, 23, 2200, maybe 2400, and currencies may continue to stay in this lower level, maybe recover a little bit, showing dollar weakness potentially, but this is going to be a shifting market. And then from this point forward, we have some really explosive moves. Now let me explain to you how explosive these really are. So auto scale here, we had a 30% rally from this point, and then a 35% rally, and then from the pullback here, because I measured up to here, pullback here, let's go to 2004 here, we had another 31%, and then from this area, we had a rally of, and I got to get up here to figure it out, of 80, almost 90%. And then we had the massive rally take place here, which was, well, actually from here, %, and then we had the 160%. So measure this out. We had a, try to get my mouse over the right one. We had a 35, and then that's the same one. and then we had a 31, and then we had a 90. So we have a potential for our first 35% rally. Then we have a potential rally from some base up to 31%. And then we have a potential rally from a base up almost 90, which I can't get to. Okay, so now I'm just drawing these out so we can kind of see where they're at. Picking bases that seem reasonable. Then we come back over here. Then we have, this is our 90, right? This is our 90, yep. Then we have a 74 and a 160. So then we come over here to a 74% rally. And then a 160% rally. Now, if this takes place, as I'm projecting, I'm going to shrink this one a little bit. This is kind of what we're looking at as a rally phase. So if we take a look at where gold is right now and understand the true parabolic potential, what would happen is currencies would flatline and start to move higher, and then start to move higher, and then start to weaken. Well, let me redraw this, because it would be the dollar would weaken through this early phase, and then strengthen, and then weaken. And eventually, through this phase, it would start to strengthen again. And that's why these currencies are so important to watch for gold. So now I've drawn this showing you an exact mirror of what happened from 1995 through 2011. And again, if we come back, whoops, that was not what I wanted. If we come back over here and take a look at this, try to leave the 2011 time frame in place here and scroll all the way back, you can see through the 1990s, roughly 93, we had weakening US dollar, strengthening US dollar, weakening US dollar, strengthening US dollar through this cycle. So ideally we had, this case is these are moving, so we had weakening US dollar to about here, strengthening US dollar to about here, weakening US dollar to about here, strengthening US dollar all the way up to this peak. So now this is the cycle. So from 93, this move upward, and then we had the rotation downward. This is the base 2014-15, okay? This is our peak 2015-16, rolling through the base level. We're really right in this area right now. And in my opinion, because of weakening currencies, global currencies, and the strengthening US dollar right now, we're going to be looking for a shift in the US dollar over the next 8 to 12 months, moving into a weakening currency, which would mean that we're likely to see some sort of U.S. Economic contagion event or some crisis event, possibly global, affecting the U.S., which should push the gold from these current levels, where I have them right over here, basically up to these levels, which is a 213% rally. Then we shift into strengthening US dollar again, And this could happen at a much faster pace. So in this case, this happened from 2002 to 2008. So that's a 6 or 7 year time frame. This next phase here might only be 3 or 4 years, maybe, for the US dollar to do this. Then this phase, which was from 2008 to 2011, was only 3 years. This might actually only be a year and a half or so. But understand that the very next phase here, ladies and gentlemen, is for, as I've drawn it here, strength. This is weakening US dollar for about maybe 2 or 3 years, then strengthening US dollar, then weakening US dollar, then finally strengthening US dollar, pushing us all the way up to these incredible levels. Now, will we get to these blowout numbers in gold? I have no clue. What I'm telling you is that everybody's got it wrong. Everybody's looking at 2018, 19, 2015, and trying to figure these things out, but we were in a totally different cycle then. You can see that we had seen this strengthening US dollar here, and then we had this moderate weakening, which prompted the 2015-16 rally. We're in a much deeper crisis event right now with the Fed rising, currencies just collapsing. For example, Japanese yen, euro, and GBP moving much, much lower. Lowest levels, I mean, look here, ladies and gentlemen. These are the lowest levels we've seen literally, well, back over here, we did get quite a bit lower here with the Japanese yen and the euro. But right now, the British pound is at the lowest levels we've seen in decades. And the reality is the strengthening US dollar is likely going to continue to hold metals higher. And that's something that you need to be aware. The strengthening US dollar right now, it's going to probably flag out a little bit for the next 2 or 3 months. Metals could rally excessively during that time frame because of global currency weakening. The euro, the Chinese yuan, the Japanese yen, the British pound, all types of currencies could weaken excessively against the dollar, creating a fear factor and a potential contagion event before we move into a dollar weakening phase, which will provide some strength to these global currencies. And that's where we get into this next parabolic phase. So we're basically targeting 2,400 on the next phase for gold, then 2,850 for the next phase, then 4,680 or higher, 4,724 for the next phase, then 67 to 6,800. Then it gets really frightening where we're up to 15,000. And now what would 15,000 mean? This would essentially be the global reset event where currencies collapse to unfathomable levels, and it's a great reset event. So pay attention. Everybody is missing this big picture, which is we are right back in this time frame in 2000, basically one right here. We are right in this phase, moving through this phase right here. I believe we are in this phase, moving to this phase, new highs, breaking away from the previous highs. These were the previous peak levels back over here. We need to see this next phase move up, establish new highs, then we will roll back down, find a little bit of support, and then move up, and this will complete our 35-36% rally. So how does that play out for us right now? Basically, we come up to new highs. Get rid of this. Get rid of this. There's our 35% target. We come in here. We rally from this level up to new highs, stall out, rally up to this level, and then stall back down here. And then start the next phase higher. So pay attention. Metals are right now one of the most undervalued investment vehicles that you can look at. And I just want you to be aware that most people are looking at the wrong similarities. They are looking at the wrong similar events. We are essentially living through a dot-com event. So 1999, 2000. Next will be some sort of a potential crisis event where CPI continues to move higher, inflation becomes even more entrenched, and then we're going to be looking at some geopolitical event probably in 2024, 2025, very similar to the terrorist attacks and the wars that we went through in the U.S. in Kuwait and Iraq. And so understand that people are looking at the wrong event cycle. The one thing that is different about what's going on right now versus all the other examples everybody's using is that we have seen a technology and speculative bubble very similar to .com. We have CPI and inflation continuing to move higher, weakening currencies. The only other time this happened was in 95, 6, 7, 8, 9, 10, 99, and then 2000, 2001, 2, 3, 4, all the way up to the 2008 crisis cycle. And that's where we're at. We're basically at the 1999 to 2001 crisis cycle in this current setup right now. And you need to be prepared for what's next, which could be a basing bottoming in U.S. markets, a weakening U.S. dollar, potentially a wave 5 in the SPY. So understand, if we take a look at the SPY here, what we could be looking at here is long-term. We have wave 1, wave 2, the way I'm counting it, wave 3, all the way up to here. And you can count this however you want, but the way I count it is A, B, C, D, E up to here. So there's our 5 waves for wave 3. Now we have a wave 4 correction, which I don't believe will end until we get below this COVID high. So we need to get down into this area, and this will set up our wave 5 rally to the upside. May only get a little bit higher than where we were at before over here. And that's where I believe, if you follow my cycles, we could end up in a bottoming cycle as the dollar weakens to about here, and then we could end up with a new cycle moving through this. This would be a strengthening U.S. dollar, then weakening U.S. dollar. Why is this important? Remember what gold did. Let me add gold here. Remember what gold did let's just stick it here. So remember what gold did in the event of this cycle phase here. So here's our, let's go back. So remember how I had drawn the cycle phases for the dollar. So this was 94, 95, 96. This, we had a strengthening U.S. dollar until about here. Then we had a weakening U.S. dollar. Oops, I'll redraw this. We had a weakening U.S. dollar till about here. So this is a weakening U.S. dollar. And then we had a strengthening U.S. dollar through all of this. And then eventually we moved into a weakening U.S. dollar. Sorry, this is, yeah, that's correct. That's weakening, strengthening, and then we ended up with a strengthening U.S. dollar through most of this. So this is strengthening, weakening. This is the inverse direction. This is a weakening U.S. dollar. This is strengthening U.S. dollar. and this is weakening. Okay, it won't let me move it. Okay, well, let's see if I can do it here. Nope. Anyway, ladies and gentlemen, we have weakening U.S. dollar, strengthening U.S. dollar through all of this. That's what this is. And this was our peak. So remember, we went through a strengthening phase, weakening phase, strengthening phase. Now we're going through a strengthening phase, weakening phase, strengthening phase, and that puts us up to our peak in the dollar over here. So we are very early in this phase. We need to see a weakening U.S. phase, a strengthening U.S. phase, then a weakening U.S. phase, and that's going to give us our peak in gold. So pay attention. We really have a wonderful setup here. This is my TT Charger chart, and you can see the same type of setup back over here. I did this earlier in a video. This is the area that we're at right now, this 2003 or 4 area, potentially back down in this area, and we have this massive rally phase that's going to take place next for silver and for gold, and it's going to blow everybody's socks off. We're really right down in this area right now, and we could see a massive, expansive phase through multiple dollar cycles over the next 5 to 7 years. All right, a little bit long, and I apologize, but you need to be aware of this. This is a huge cycle in metals that could happen over the next 5 to 7 years.